Hey, what's up everyone, and welcome to the School of Personal Finance. So the markets have been terrible. The economy seems to be in a free-for-all. Panic is out there in the streets. Every headline is negative. It's just doom and gloom all over the place. In this video, I'm going to try to take a step back and talk about some of the benefits of a falling stock market and how over the long term, it really could be a positive for you and your situation. Just like you, I don't like losing money. I'm worried about the economy. I'm worried about the stock market. I'm worried about everything going on in the world. There's a lot of fear right now and I'm feeling it as well. But I don't want to let those things drive my investment decisions. So I'm going to try to share with you my thought process, how I'm trying to approach all of this and look at it. And hopefully this is going to lay a foundation for us to build wealth in the future. So I'll explain all of that in this video. All right, let's get to it. All right, so real quick, come connect with me on LinkedIn. I am posting daily over there on personal finance topics. Also, send me a message, tell me a little bit about yourself. A bunch of you have done that already, and I love it. Also, head over to schoolofpersonalfinance.com, get on my email list, download the free PDF, 15 numbers that you should be tracking to become great with money. Check out my education center, and also check out the power sessions where you could work one-on-one with me using Right Capital financial planning software. Go check them all out. All right, so I'm gonna level with you. This market sucks. There has been nowhere to hide. It has dropped fast and furious. Even if you're an older investor and you have a lot of bond exposure, thinking that you are being safer, bonds have had the worst start to a year basically in its history since like the 1800s. The stock market, I mean, we've dropped 20% pretty much like that. And if you're any very high growth names, it has just been a complete bloodbath. So it's been miserable and it's a little bit depressing. And I've been speaking with so many people who are just down and out about the whole thing and not sure what to do next. So I wanted to make this video to talk a little bit about the bright side of this and to remind people that markets move in cycles and that this is part of the game. You know, having this risk, having this downside, just because we haven't experienced it much over the last 10 years, it does happen. And when it does, it happens like that. And it's like, there's nothing that you could do about it. You know, I mean, I'll have traders who watch my videos who will come on and say, you should have been shorting this market and always throwing their, great advice out there when hindsight is 2020. But it's just hard to know when you're in the thick of things, what the right thing is to do. And I'm a long-term investor. So I look at a long-term time horizon and I try to be reasonable while looking at all of this and not make rash decisions based on my emotions and everything that's going on. But it is hard. And if we look at the economy and the market at this point right here, what do? It's hard to know what to do, especially if you're looking to trade and you're looking to try to, catch a rebound and catch a falling knife. Now, again, none of this is financial advice. I don't know anything about you or your situation, so you have to do your own research and make your own decisions. This is all really just for educational purposes only, but I'm going to try to walk you through this and talk you off the ledge if that's how you're feeling as you watch your account value just go down and go down and go down and you want to run for the hills. Now, I'm not going to sit here and say to you that I think everything's going to be great and that the market's just going to eventually go back up and it'll be all roses and just don't worry about anything right now, because that's just not reality. We might be faced with a decade of no growth. We could have much more downside here than even me or you expect at this point. We just don't know what the future holds. It could take a very long time for us to go through a downturn in the economy. I mean, this has really just started. So nobody knows where the bottom is. I mean, you turn on CNBC right now, it's like everybody's coming on talking about when they think the bottom is going to be or if a bottom is already in. But I feel like we're very early in this to even be thinking about a bottom. And if we do hit a bottom, then great. But it's not like we're just going to bounce right back up to all-time highs. We might just sludge along at the bottom for many, many years before we start to, before the cycle changes and we start to move back up. We just don't know what the future holds. So as far as expectations go, I just want you to be realistic that I do think that the party is over, that these straight lines of, the market going up year after year after year, double-digit returns, I do think that that has come to an end and that we have to face that reality. So the question is, what do we do going forward and how do we deal with this? And the point of this video is I do think that there is a bright side to that. But one of the big questions is, and what it all hinges on, is your time horizon. How much time do you have before you are going to need to use this money? If the answer is like 5 years, 3 years, then, we're in a very tough environment right now and you're at a lot of risk. If the answer is 10 years, hopefully 15 years, 20 years, if you're saving for very far down the road, then this is going to present an opportunity. And I don't think that there's much that you even need to do at this point, except for sticking to your plan. So that's what I'm going to talk about here is what are these opportunities? What things can you do during this prolonged period of either a market downturn or going sideways or much slower growth? All of these things that I believe are going to be happening. And I've been talking about this for a year now. It's not like all of a sudden I'm changing my tune. I have believed that we're going to have slower growth, but it doesn't matter what I believe because nobody knows, right? And I'm still sticking to my own plan and focusing on long-term growth and trying to make smart decisions. And that's kind of what I want to share with you in this one. All right, so let's talk about some of the smaller benefits that you should at least be aware of. So the first one, and this only really applies to brokerage accounts, not retirement accounts, not 401ks or IRAs, and that is tax loss harvesting. So if you have positions where you invested money in certain stocks and they've gotten obliterated and you have a big loss on them right now, if you sell those, you could go ahead, reinvest this money, sit in cash for a little while. You could take the loss on it, right? And you could declare that loss on your tax return and offset any other gains that you have. Or if you don't have any gains, then you could take a loss of up to $3,000 against your ordinary income and then carry that loss into future years. So this does present an opportunity to harvest some losses with, some of these stocks that might be sitting in your portfolio. So that is one benefit of a down market. I mean, it's not a great benefit, but it is a benefit where you can, play the tax game a little bit. Now, there are some rules that you have to be aware of, like the wash sale rule, which states that you can't just sell a stock for tax loss purposes and then buy it right back again. So you have to wait 30 days in order to be able to buy that security back or an identical security. So you want to make sure that you actually do want to sell whatever stock that it is and that you're okay for not owning it again for those next 30 days. You can buy something in a similar industry or a similar sector if you want to have exposure to that, but you just want to be aware of the rules when you're selling something to take a tax loss on it. All right, and then another benefit of this sell-off in the market is that when valuations are lower, it could present a nice time to do Roth IRA conversions. So now this totally depends on your unique situation, your tax situation, your income, your taxable income, what all of that looks like. But basically with a Roth conversion, what you're doing is you are taking pre-tax money, so say traditional IRA money, and you are converting it into a Roth IRA. So by doing that, you are paying the taxes now on the conversion, and then the money will be in your Roth IRA and it will grow tax-free forever. So a simple example, say you had $100,000 in your traditional IRA and now it's only worth $75,000. It would be a good time to go ahead and convert that now that it's worth $25,000 less, because you're going to pay less taxes, right? You don't have to pay it on the whole $100,000 that it was worth just a few months ago. Now you're only paying it on the $75,000. And as that money grows, hopefully the market eventually rebounds and that money grows, it'll all be tax-free in the future. So Roth conversions, it's a good idea to do it when valuations are lower and hopefully they're going to go up again in the future. And you don't have to do it all at once. So you could scale into this. You could say, you know what, I'm going to take only $10,000 and do a Roth conversion on that money, pay the taxes now, and then have it grow tax-free in the future. So there's definitely some strategy around it. You could look at your individual tax bracket if you know what your income is going to be, and you could say, you know what, I'm just going to convert up to the top of my current tax bracket and no more than that. And then the third small benefit from this market sell-off and this bond sell-off is that interest rates are going up. So that's good for savers. So if you have a lot of money in a savings account, you should start to see higher rates. It's not going to be earth-shattering, but they'll be a little bit higher. CD rates are going to start to come up. I made a couple videos about I bonds, and those are very attractive right now. So currently paying 9.62%. So go learn about those. That's a good place for some cash right now. But for people who are living on a fixed income, to have this increase in savings rates, it could be beneficial. Now, I don't remember this, but I've heard about in the 80s when like CD rates were double digits. Imagine you could walk into a bank, get a 5-year CD for 14% a year. Like, that is absolute craziness. I don't think we're going to see that again, but it will be nice to have some higher savings rates where you could actually keep money in the bank and get paid to keep it there. Imagine that. And then the biggest benefit that I believe from this market sell-off is that you're going to have the opportunity to accumulate stocks or assets at lower prices for an extended period of time. So I actually just wrote something on LinkedIn where I said, you know, if you believe that the stock market is going to be higher when you actually need to use the money, then any purchases, any contributions that you make right now and through the years, they're going to be worth more in the future. And that is a good thing. So I always talk about how when I first started working in the year 2000, that the market, it really went nowhere for like 12 years. Even though there was a lot of volatility in there, and we had the dot-com bubble that burst, we had the Great Recession, there were events that were very volatile and that were crazy. But when I look back on it, those events, they really laid the foundation for me to take advantage of this crazy bull market that we've had from 2014, say, through the end of 2021. So it could work out to be the same way. Like, we don't know what's going to happen in the future, but if we do have a big downturn in the market and it takes 10 years for us to even just get back to where we are, that'll be a very good thing for you if you have a long time horizon. So dollar cost averaging, that is a huge advantage. If you are contributing to your 401k or to your IRAs, and you're contributing every 2 weeks or once every 6 months to your IRAs, or however you do it, then you are going to be able to take advantage of these downturns in the market, and you are going to be accumulating more and more shares or more assets of whatever it is that you are accumulating. But if anything, that is the silver lining through all of this, that valuations are coming down. And when you don't need the money, it doesn't affect your daily life. It doesn't impact you. So as valuations go down, you see your account statement going down, you're losing money, it sucks. But keep in the back of your mind that as long as you stick to the plan, as long as you still have the ability to continue contributing into these accounts, throwing money in as we go through these downturns, during the next market cycle, this is what is going to lay the foundation for you to become wealthy, for you to grow your net worth tremendously, as long as that next cycle does come. So yes, there are the doomsdayers out there that say that this might be the end, but people have been saying that since the beginning of time. So nobody knows what's going to happen in the future, but we do have to have some faith and trust in our country, in America, in the growth of this country, that we're going to continue to prosper and to expand, and that we will figure things out and that things will be better in the future. If you have faith in that and you believe in that, then the downturn in the market right now, it just shouldn't make you lose sleep at night. If anything, you should look at it like, all right, I'm going to have an opportunity to add to all of my investments and accumulate at these lower prices. So that's what I want to leave you with. A little bit of inspiration. I hope that you found this one helpful. I know that I went on a little bit about this, but hopefully it came across that, you don't need to be stressing like crazy right now, even though we're all kind of feeling it. Hit that like button if you enjoyed this one. Subscribe to the channel if you're not subscribed already, and I'll see you again in the next video. Thanks.